Did you know that a single wrong foreign transaction can attract a plenty penalty of up to three times of the amount involved, and in serious cases, even it leads to arrest too. Hi, welcome back to CA Gangadhar Reddy channel, your trusted source for practical finance, tax, and compliance knowledge in India. Today, we are diving deep into one of the most important yet most misunderstood laws in India, that is FEMA, the Foreign Exchange Management Act 1999. Whether you are a businessman dealing with imports and exports, or an NRI managing assets back home, or a starting receiving foreign funding, or a professional handling cross-border transactions, even whatever it is, if you involve the cross-border transactions, FEMA directly impacts you. India's foreign exchange transactions run into trillions of dollars every year, and FEMA is the law that governs every single rupee that across the border. Ignorance is not excuse here. Violations are serious, and enforcement agencies are getting strict every year. In this video, in this video, I will break down FEMA, its objectives and key provisions, and who it applies and what transactions are permitted or prohibited, penalties for violations, and most importantly, how to stay compliant without compliances. So, if you want to understand FEMA in a right way, clearly, simply, and with real examples, stay with me till the end. Thank you for watching. So, let's start into the video. So, FEMA Act is a replacement act for FERA, Foreign Exchange Regulation Act 1973. So, it was replaced for this act. So, the FERA Act has been replaced with FEMA Act. So, this FEMA Act 1999 is a complete guidance for provisions and transactions and penalties and whatever it is for transactions involved in cross border. You know, right, why the cross border transactions will come and how it will come. If you watch the video till the end, you will get an entire understanding. So this will helpful for entire CA students and CA professionals and the finance invoice guys and the regular people who are involved in the foreign exchange transactions. So let's jump into this core concepts. So there are few sections, 49 sections in this act, and this regulator is RBI. RBI will take care of this, like how will regulate the act and all. So even the foreign, there are current transactions and capital transactions, and also prohibited transactions, and who will give the permissions. All these acts will be regulated by the RBI through enforcement of the ED. Like ED will enforce this, like ED will do the researches and the scrutinies on behalf of the RBI. And then if you go to the jump, what is FEMA? The FEMA is the, it is civil law. It is not a criminal law. Okay. Under FEMA Act, you can FEMA cannot arrest directly, but through another act like of prohibited act of money laundering. Under this act, he can arrest. So FEMA, even though it is in civil law, we need to note that they can arrest. So the key objectives of this FEMA, it is an external and external trade for payments and exchanges. It will facilitate our exports and imports and our regular transactions. It promotes development of foreign exchange market. So if you have foreign exchange in your country's economy, so it will be the rich. Say suppose if your imports are 300 million and your exports are 200 million, it will be deficit. So you need to buy foreign transactions, foreign currency for shortage of 100 million. So in a reverse case, if you have an 400 millions of exports, so in that case the 100 would be the surplus. From this surplus you can give foreign exchange to your needs, like if any foreign travel or if any medical treatment. If suppose there was a guy in India, he wants to go to America for medical treatment, so he need dollars. Or if you want to go to Australia, you need Australian dollars. If you want to go to UK, you need pounds. So based on the country, you need some foreign currency. All these foreign currencies is not available with Indian RBI, so regulator of the banks. He may not it, right? So through ADs, he can give the RBI can give the foreign currency. If it is in deficit account, no, RBI or ADs has to buy from other country. So obviously it would be difficult situation for the Indian economy. So so it will promote foreign exchange regulations and easy ways to get the foreign funds. So when you have a surplus account in the currency, so you can maintain country economy properly. So it will maintain the stability of the payment. So suppose see in case of deficit situations, you can't give foreign currency with unlimited volume. So if you give like that, you will lose the control in the exchange economy. So it will regulate capital and current transactions. So these are the core concepts covered under FEMA. See, if you see the differences between FEMA and FERA, if the Foreign Exchange Regulation Act to FEMA, Foreign Exchange Management Act, there are few changes. Earlier it was criminal law. Under this act only you can premise the accused if any, but it is civil law. But under Money Laundering Act, with the help of Money Laundering Act, we can premise the accused. So okay, it is a proof. There are some violations and guilt. If you feel guilt, otherwise you need to premise here. So there was a imprisonment and fine is even involved in this act. So there is only fine up to 3%. I mean 3 times over the amount involved. Say suppose the amount involved is 1 crore, so you need to pay fine until 3 crores. So how big the act it is. So if you have any small mistakes in this case, so you would be used penalized in the FEMA Act. So focus on the conversion of forex. So it is in the management and facilitate of the forex. So it is only liberated in this. So there are a lot of liberations in this act. But in FEMA there are a lot of advancements involved in the act. So capital account highly restricted in case of FERA Act, but now it has been permitted with conditions. There are a lot of conditions involved in this. So this is allowed now. This is highly restricted earlier. So it is very restrictive and case by case. We need to go by case by case. You have to go to foreign travel, or you want to go to medical treatment, or if you want to go to any education purpose. So every transaction we need to dig by case. But in this there are some automatic routes for the regular transactions. So that will help you to get the foreign exchanges very fastly. Okay, the key definitions involved in the FEMA Act. There is a what is the person resident in India, a person who stays greater than 180 days in the specified year. So what would be residence in India, that we need to understand this definition. I hope you all knows this definition. And then person outside India, which is not who is not a resident in India, would be the person outside India. There are some includes NRIs and the borders, whatever those who are involved in it. What is the foreign exchange? Other than money involved other than the Indian rupees would be the foreign exchange here. So there is a clear definition here. So this we need to understand. And then who is the authorized person? Authorized persons are, there are bankers, money exchangers, offshore banking units, and any authorized dealers by approved by RBI. So RBI can give, who can authorize these foreign transactions. So if any individual wants to money, he has to get that money from the authorized dealer only. So he cannot go AD. Through AD only he has to get. He cannot go discuss with the US guy and get the dollars. That would be prohibited under Indian FEMA Act. So there are some capital account transaction and current account transaction involved in the FEMA Act. These are the core concept under FEMA Act. So if you see what is the capital account transactions, transactions which alter assets and liabilities of the person which is resident in India or resident outside India. If in any case, if any assets or liabilities are changed by for person in India or person in USA or foreign country, whatever wherever it is, the assets or liabilities changes in their balance sheet due to that transaction. That particular transaction will be treated as an capital account transaction. So hope you understand. But sundry debtors and sundry creditors, even though those are in the balance sheet, we need to check whether it is in capital account or current account transaction. That I will explain in the next page. So there are current account transactions also. All foreign transactions that are not capital account transactions include trade payments, remittances of services, income transfers, education, and medical expenses. So these are the current account transactions. Okay, all these, if you observe income transactions, so sundry debtors eliminate here, trade payments, sundry payables, sundry creditors eliminate from here. So from capital account to they will come to current account transactions. Okay, and then foreign travel, of course, that is not that if you travel, you won't get to change your balance sheet or level. So there are few capital account transactions involved in the uh, regular transactions, so that will be covered in the current account transactions. Generally, capital account transactions definition of it is saying assets and liabilities of the any person. So current assets, which are especially trade payables and the sundry debtors are the assets or liabilities for the balance sheet, if you read the exact definition. But if it involves the trade payments and the income related transactions and the regular business trade related transactions will cover in the current account transactions. So you can exclude those from the capital account transactions. You note this point. If you read the definition as it is, it would be the small flaw. So I just want to explain that. So next, if you go to the what are current account transactions, there are current account transactions, how it will be. So there is no RBI permission needed for the freely permitted transactions, which is mentioned in the section 3. So there was a limit also up to $250,000, up to 2,15,000 to 50,000 USD dollars. You can get the foreign exchange from authorized dealer, even though no RBI permission is needed, and those transactions should not be restricted or prohibited under the FEMA Act. See, there are three schedules in the FEMA Act. One is prohibited schedules, and the schedule 2 approved with the government, and schedule 3 approved by the RBI. How it will means, this transaction even central government tells to you, even Modi asks you to do, you can't do. This is the prohibited list. So Modi and you and some other prime minister also and finance minister will go into the premises. So this is how the act will come here. So definitely you should not do these transactions. So what are these transactions? The remittance out of the lottery winnings. So say suppose you win a lottery, you got 1 crore rupees. So you want to spend that 1 crore rupees in the foreign, not allowed, because you win lottery here, you have to spend in India. So you can't spend that amount in the foreign. So lottery winnings or any racings or ridings or other hobbies. Say suppose you have an horse riding hobby and you got some money there. So you got winnings, or there are a lot of bettings involved in India right now. So if you like any rummy or some kind of games involved in the uh, winning of lottery kind of things, right? So if you get money from those kind of races, so you cannot spend those money in the foreign. So that is also prohibited under FEMA Act. So I hope you understand these prohibited transactions. So whenever you want to spend any foreign transactions, you should not be in the prohibited list. So there is a remittance of the for purchase of lottery tickets. So you have $1,000. You have $1,000 from your in your from your AD to buy a lottery ticket in foreign. So still it is prohibited under the FEMA Act. You cannot buy lottery tickets from Indian money. So if you have while converting exchange rate, so that is also prohibited. So you have in Indian rupees, try to buy some banned margins. Like say suppose some advertisements are banned in India, or you cannot do those kind of advertisement in foreign. So for that kind of activities, AD cannot give the foreign exchange for you to spend those amounts in there. So I hope you understand this is restricted. So any remittance of dividend by the company after violating any balancing provision. Say suppose if you have an if you haven't received dividend from the Indian company, that company has involved some kind of violations. So that kind of dividend, the amount you earn from the dividend, you cannot buy foreign currency with that dividend. How would they know? That they will get in the post-mortem case. But I'm just telling the probability. So these kind of activities you should not involve. So if you are a chartered accountant professional, you should tell to your client, so this money you cannot buy any foreign exchange with this money, you have to follow the compliances and get the proper executor. And there are some payment of commission on exports under the rupee state credit route. Say suppose there are some, I already told you, right, the surplus account, deficient account for the Indian government. So if any activity which is increase the deficiency, which affect on the deficiency or surplus of the country's economy, so RBI has been prohibited those kind of routes. So such route is one of these rupees rupee state credit route. So you cannot give, like you cannot borrow funds like as they allowed, even though if a private company wants to give the loan to you, so you cannot take that foreign currency loan, because that will be burden to the India. In future you need to pay the foreign currency. So this kind of transactions has been prohibited under the FEMA Act. And there are some transactions you can still do with the help of central government approval required. So this central government approval required will be before you do the transactions. You cannot do the transit and go over the formation or information, that those kind of transactions are different. But here there are some few transactions, those are list. If you want to do this kind of transactions, you need to get the central government approval. Say suppose cultural tours, say some any cultural tours, ministry of any harvesting team or hydra team, this kind of involvements, this kind of activities, we should promote them in the foreign currencies to get the investments from the fair. But for that you need to get the government approval, which government, central government approval you need taken. Remittance of hiring the transgenders by TV channels. If you want to hiring any transponders means they will give the news to our Indian channels. They live in the foreign, and they will provide some news related to India, or which affects the Indian economy, or which is useful in India. Some news channels can buy their they can buy that news. So we can hire those guys. For that we need to get the central government approval. And the advertisement in the foreign print media, of course, if it is greater than 10K, you need to get the approval. And remittance in the foreign vessel, so if any port involvement and any fear remittances from abroad, you need to take the central government approval. And the payment to the free wages in the shipping or airlines, so these guys would be the foreign guys also. So for the foreigners, if you want to pay the foreign currency, still you need to get the central government approval. And then few transactions you need to take the RBI approval before you enter into the, say suppose if you want to donate the amount more than the specified limits, in this situation you need to, you need to get the RBI approval before you do. And the commission to agents abroad to the real estate purchases, this is also RBI permission required. And the hiring charges, and the remittance more than 30K USD for education purpose, and the medical treatment more than 2,50,000 for visit. So this is, for this also you need to get the RBI approval. I hope you know the limits and all, what are the capital account and current account. So the all these are the, even though if it is capital or current, if you are doing these kind of transactions, you need to take the prior approvals from the respective authorizer. Say suppose if it is an hiring of transporters for Indian channels, so you need to go for the central government. If you want to do the any donations, if you need to go to the RBI. So and again there are some limits in the current account transactions also. This scheme is called, there is one liberalized remittance scheme. Under this scheme you can get the foreign currency for the current account transactions. There is a general rule here. For current account transactions you can do some liberalized schemes, no approvals are required and all. So the transactions are not covered here. We need to check under this scheme what are the limits. So if you want to visit abroad, either for tour purpose and all, so for entire year you can get $250,000 per year for foreign travel. So for travel you can get through AD bank only. You cannot see, this is fixed. You cannot do any other bank transactions. Only authorized dealer only can able to give the foreign currency for you to go for the particular requirement under your circumstances. Say suppose if you want to go for the education in the abroad, in that case per year you can able to get 1,80,000 foreign exchange only from AD bank. Okay, for any medical treatment yearly 2,50,000 only. Earlier I told you one condition, right? If you want to go more than 2,50,000, you need to go for RBI approval. But without RBI approval, you can do until 2,50,000 only. And if you want to gift or donate something, that is also 2,50,000 per year. But if you want to go for the gift or donation something, if it is in donation, again you need to get the RBI approval. So because it is in the transaction is in the RBI list, right? Exceeding the specified limit. So it means say if you want to exceed more than 2,50,000, this is the specified limit here. So if you want to exceed more than 2,50,000, you need to go for the RBI approval. And the maintenance for relatives, this is also 2,50,000 per year. And also business travel abroad. If it is in regular travel, the entire limit is 2,15,000. It is in business travel, your limit is to 25,000 per trip, not for a year. This is per trip, okay? And employment abroad. If you want to go to abroad for employment purpose, you can give these 1 lakh dollars USD per year. And also immigration charges. Just you want to shift from here to India to US, then you have to settle there, right? So for that also, you cannot settle there with Indian currency. For there, no one will accept. So we need to give the foreign currency only. The foreign exchange will give from the Indian. We have rupees, so you have to sell that rupees and buy the foreign currency to the extent of 1 lakh dollars USD. And there is subscriptions or magazines or these kind of activities until 2,50,000 you can do with the AD bank freely without any approvals. The overall cap. So entire say suppose year you spend 50K for travel tour and 20K for education, and for medical treatment or 100K for donation for to maintenance relatives or 10K. This overall limit, the overall limit of this transaction should be 2,50,000 per year. If it is exchange, you should go for the particular uh, authorizer to get this approval. So I hope you understand this. So all limits are these are the individual basis. It's like March to April basis. So per year, all these limits will change. The limits will verify in RBI portal regularly. So these will change regularly. They don't change unless there would be a use requirement. So I hope you understand this. And also under this scheme, I already told you, right? There are some TCS rates also. If you want to get the foreign currency, you need to pay the additionally TCS. So they can collect tax from you and then give the foreign currency. So entire this combination, the medical, education, travel, I already informed you that all these limit would be 2,50,000 per year. If you want to go more than 2,50,000, there would be TCS rates extra on it. Say suppose there is a loan in the education loan from Indian financial institutions up to 7 lakhs. You don't need to get any TDS. After that, they can deduct 0.5%. I mean, deduct means in year it is the collection. So they will collect this much of extra collection. So this they will pay on your PAN card in the 26 AS. I mean, you will get this in the TDS portal that you can file the return and collect adjust from your tax payment or get a refund. So these are the transactions for education, for self medical employees. You can take a screenshot as well. So up to 7 lakhs, there is no TCS rates for all of these transactions. But if it is more than 7 lakhs, for these education and medical treatment, you can get the collection of only 5%. But after this, the business tour or donation or maintenance for these transactions, definitely they will collect 20%. So because this is for to maintain the trade efficiency. So instead of doing these kind of transactions, they have to collect this 20% rate. So the tax collection rate. So this the Indian resident may go back to do these kind of transactions because these are not uh, relevant for India to grow than earlier. Say suppose education is of course mandatory, medical treatment also mandatory. So this kind of we have to give because these are important for business travel or tourism or donations or relatives maintenance. These you can restrict, right? Then only you can your trade deficit will balance. That's why they took the higher rates here. I hope you understand. And then what is prohibited and the key matters. So all these we already discussed these prohibited transactions, the payment of interest prohibited under if Director General of Foreign Trade, if any foreign trade policy has been prohibited those kind of goods, so that you cannot do the import for the those kind of goods. And also banned prohibits on the political parties candidates, and also for the margin calls, lottery tickets. These are margins and racings ridings on these all these are the gaming platforms. So all this has been prohibited. There are some tips for the CA guys. We need to always use form 2 to get the any remittances, and the LCR usage should be the yearly basis. And you need to get 15 AC for any common remittances for the within prescribed limits. Say suppose if you want to import one software, for example 1 lakh rupees software, for that you need to file this form 15 CA or CB, then you can get that get that funds. I mean the remittance form will give that. If you provide that to the AD will give that 1 lakh dollars, I mean $10,000 to you. You can pay to for your software. And also TCS limits, and also aggregate only 7 lakhs. Medical treatment is the best exemption for us, so that's why they didn't give any more restrictions on the medical treatment. So all these are the recap. Then what is the current account capital account transactions? Capital account transactions are involved. Most of them are restricted, but there are few capital account transactions as allowed. What is which is investment board? If you want to invest in any foreign country, you can do by the general route. There is automated route and the prohibited route. In prohibited route you can't go. If it is an automated route, up to if it is a joint venture or an associate abroad, then you can invest up to 400% of your net worth. And also under this liberalized scheme you can use for the individuals. Foreign currency accounts, that I will tell these accounts part in the next part of the video. So there are some account: NRO account, NRA account, and foreign exchange account. Under how these accounts has been maintained for the going account. The foreign securities, so if you employees can hold ESOPs of the foreign security, because if you are the employee but your holding companies in USA and subsidiary companies in India, you are working in an Indian company, but Indian company is ultimate beneficiary owner is I mean US guy. So these ESOPs has been given to you, so you can hold this, because if you sell these shares, foreign dollars will come to you, right? So foreign exchange will come to you. So this will be fully allowed in this FEMA Act. Immovable property abroad. So if you want to buy any immovable property, you can buy with the RBI permission or through LSR limit. There are some limits in the LSR to buy the property, so that you can suppose for 400% investment like this. There are few restrictions also there. You have to compile all those restrictions to buy any property in abroad for the residents, but permitted to non-residents. So they are coming in. Here we are going out and getting these transactions. They are coming in, but they want to do the investment, foreign direct investment, automatic route, and the government route. This I will tell you in the later part of the video. And the portfolio investment, yes, they can do the investments in the India with their foreign currency, this which is fully allowed. And there are some restrictions on the percentage of limits that I will tell. And NRI deposits, of course, there are some, I already told you, right? NRE, NRO, and another accounts, that there are some specified rules in it, we have to follow, compile that. This is also I will tell in the next part of the video. uh, External commercial borrowings, this is also allowed, because they can go and get the commercials under ECB scheme. And the trade credits, short and long, for imports they can give the credits. See, outsiders can invest to automatic route without any approvals from the RBI or central government, but the investor has to only inform to the RBI he has invested in the Indian funds within 30 days from the receiving the funds. Say suppose one foreign company acquired shares in the air transport services, so he can do up to 100%. He can invest, and I mean entire subs. He can incorporate entire 100% subsidiary in India, but he has to inform that subsidiary information through RBI portal. Fair forms registration is there, and he has to register there. And also informed to the RBI within 30 days of the receiving of the funds. So this is how RBI regulates the which money coming and why that money coming. So under these fields, agriculture or animal husbandry, and the air transport, automobiles, IT and back office services, BPP services, telephone services, e-commerce business, and also construction of housing and townships and food processing units. All these businesses, foreigner can invest 100% of his capital. So prior approval from the relevant ministry or relevant act, the central government or FEMA, under this government road. So if any media industry up to 26% he can invest. If he wants to invest more than 26%, he needs central government approval. And if any broadcasting or news industry, 49%. If any multimedia retail trade, multi-brand retail trading, up to 51% he can invest. More than that, he has to take the permission from the coal mining. For even though if more than 100% he has to invest. It's like even for single 1% is also he has to get the approval. And I mean more than 1%. If you want to invest in the banking sector, more than 20%, he has to take the approval from the central government. In any defense related issues, he has to up to 74 auto and up to 100 for government. And satellite business 74%, insurance 74%, auto, like this. Up to 74% they can do. More than the 74% they has to inform to the central government. I mean take the prior approval. In this case, they need to inform to the sectors after 30, within 30 days. There are some prohibited sectors. I already informed you. These we cannot allowed under any circumstances. And then I already told you, right? Few NRI accounts and remittances under the FEMA account. What is NRI, NRE, NRO, and foreign currency non-repatriable account? What do you mean by repatriable? I will explain in this. There are this is the most confusion area wherever it is. NRE means non-resident account. NRO means non-resident ordinary account. NRE means non-resident external account, non-resident ordinary account, and FCNR account means foreign currency non-repatriable account. See, you are a foreigner. For a foreigner coming to India, you can't hold cash in on hand, right? So you have to invest in the banks, right? So in banks, as a foreign guy or foreigner, you need to open one account. That account, call it as either NRE or NRO or foreign currency non-resident account, repatriable account. See, with NRE account means, so if you are getting, if you are the foreigner, you come here and you are getting your salary from the foreign company only, but you are staying in India. For multiple reasons you are staying in India, but you're still working with the foreign companies or you still businesses in the foreign. You are getting your money like foreign money, foreign exchange. So in that case, external account is needed because you need to deposit foreign currencies only in this. So in this NRE account, you can deposit only foreign currency income only. So the same person, if he earned any money in India, Indian income or foreign, if he earned any Indian income, he cannot deposit under an RE account. He has to deposit in a RO account, transaction ordinary account. So based on his sources, so particular foreigner as foreign funds or Indian funds or income is receiving from foreign and in foreign currency, he has to account in the NRE account, non-resident external account, because the funds is coming from external country, so he has to invest in the in external account only. So fully repatriable. Repatriability means once he took the he has opened NRE account in India. All these accounts will give in India only, right? So in India he has opened one NRE account, and Fortunately, he need some more foreign currency in foreign, so he wants to repatriate. It's like he wants to send back this money to foreign account, which is allowed. Repatriation is fully allowed in this NRE account, but NRO account, it is restricted. Even though you earn Indian money and you can deposit it only in NRO account, but you cannot uh, gi- transfer that money to your foreign account more than 1 million per year. Up to 1 million you can. Okay. And the tax treatment, there are because you didn't earn this money in India, right? So there is interest free income. This is fully because the Indian income and the foreign income both are allowed in this NRO account. So you can, in this both accounts, you need to convert your foreign currency into Indian rupees and then use it. Okay. The giant holding is with an array which is allowed with restrictions also. You can join this account. Nomination is also regularly allowed. So if you are a foreigner, came to India, either for you do the business in India or foreign, wherever business, if it is in foreign income, you have to do go in national account only. If you have an Indian income, you have to deposit in NRO account. In NRO account, you can invest either dollars or income, whatever it is, you can ordinary business. So both incomes can be allowed here, but repatriation is limited here. So you cannot repatriate through the other accounts. In this, there is one risk here. So if you do this kind of transactions, while you transferring to your foreign currency, your exchange rates would be changed. You may, let's say, suppose you can, if you have $1,000, you buy that the rupees and 8 lakhs as received, and you put these 8 lakhs for 1 year, and then the 8 lakhs wants to repatriate, transfer to foreign account after 1 year. So you have an 8 lakhs. The foreign currency rate is 85 now. So how much dollar will you get? Will you get 10,000 again? No. For 8 lakhs rupees, you might have interest for 10% for 1 year. So you will get 8 lakhs 80,000. And if you convert this to, there is an, if you have 8 lakhs, and if you say suppose 4% interest you will get in savings bank, 8 lakhs 32,000 you will get. And then if you convert that interest and along with principal is 97,000 $9,788 only. So you took $10,000 after interest also, it is getting 9,800 only because of this foreign exchange remittances, foreign exchange differences. So for that purpose, you can maintain that $10,000 in your own currency. That will help here. That is foreign currency non-repatriable account. So you can you earn money in foreign, but you are living in India, and you invested that money in this non foreign currency non-repatriable account. Here you can invest only foreign currencies. So there are three kind of bank accounts you can open as a non-resident in India: NRE account, NRO account, or foreign. This will help you to get the money foreign money to Indian rupees, foreign money in foreign currency. So in this you can avoid exchange losses. So to ignore the exchange risk, you can invest in the, I mean, you can maintain funds in the foreign currency non-resident non-repatriable account. And then this is also interest exempt because you get the funds from outside country and there is no interest in India. So but you can join this account with the giant account with the non-resident only. You cannot joint account with this resident bank, because resident will get the Indian rupees, right? So under these rupees, Indian currencies are allowed. So you can join the account with the residents also. But in under this you cannot. And also nomination anyways, all these are allowed in any account. I hope you understand this confusion now. So now we can able to check NRE account, NRO account, and foreign currency non-residence account. And then authorized persons. Who are the authorized persons? Generally, I already informed. RBI can give these issue notifications and regulations and the permit the transactions and may compound the offences. All these will take care by this primary regulator. And the implementation level, all ADs only. Say suppose ICICI Bank, SBI Bank, they has to do some authorized dealer with RBI. They can authorize dealer can full foreign exchange services or limited foreign currencies, money charges, and the FEMA regulation must comply with all these FEMA and RBI rules, and also KYC norms. All these will be done by the authorized dealers. And then enforcement will be ED, enforcement directorate. So ED will authority of the investigate any foreign conversations and the show cause notices for any suspicious and adjudications and penalties and arrest under the money laundering, prevention of money laundering act, and the appeals in the FEMA court. All these will are the other. How would be the penalties? The penalties would be, I already informed it, three times more than the amount involved, and the continuous offense 5,000 per day, and uncountable per day 5 rupees, 5k per day. It is continuing. So if you delay for 2 years, so you will get then crores of rupees of penalty. So officers are, all these are the ED officers, all these are the penalty structure. And also compounding structure would be, why it is compounding? RBI FEMA controversies, most of controversies. So, you did a mistake unknowingly. Say suppose a regular simple mistake without, so you have to file the form within 30 days, but you didn't file. You filed this after 180 days. So for this 120 days, you go for the compounding. Within 180 days, you can go for the compounding. It's a very simple route to pay the penalties, minimum penalties, lower penalties. So you accepted your defeat. I mean, you accepted that I did a mistake, so I would like to ignore this. So with the nominal uh, penal charges, they will do compounding your case and settle the route. So this is the best advantage. It's about criminal proceedings and no appearances, tribunals, and faster resolution. So this will come. This is the benefits in the compounding routes. So there are compounding system in the RBI FEMA Act. And also in FEMA, there are regular interpretations like export or import of goods and services. What are the export regulations? Declaration. Every exporter must declare to customs or AD banks or any software SDF form. I mean software form or some other forms. They need to declare to the authorized bank. So regulation period. Exports must be released within 9 months. Uh, Within 9 months for the regular exporter and 15 months for the sedge. Write off. You can write off up to 5% of the exporters. EFC account means exporters can retain their accounts in their foreign earnings, foreign currency account. They can maintain EFC account and they can put their exports in the foreign currency only to avoid the exchange risks. And FEMA and DGFT. Director General Foreign Trade and the FEMA, there are some few policies. They frame few trade policies. Say suppose if you want to import particular kind of goods, say suppose electronics or fertilizers or any some other real estate services. This for this kind of activities, DGFT has put some conditions like they has to compile. If you want to import electronicals, you need to specify goods. You need to get an DGFT approval first. Then after DGFT approval, you can import those goods. So the under like this, you have to compile both the acts for the exports and then imports. But in imports, advance remittance, you can pay up to 500 k. I mean 5 lakhs USD dollars to import without a bank guarantee. For payment period, normal credit periods are allowed up to 180 days, and the letter of credit and evidence of input, you must do the bill of entry or customs or certificate within 6 months of. And then remittance restrictions are there. No input of goods can be sanctioned countries without RBI approval. And the import of gold, there are to import the gold, you need to buy more foreign currency to pay to them. So it would be restricted under other dealers only you have to do. And there are some policies notified by the DGFT under that policy only. So you cannot import more than 3 crores goods in a month. Those kind of policies, and you cannot do more than 20% of your net worth. These kind of conditions involved in the gold policy. Those policies has to compile. And there are some foreign direct investment, the overseas direct investments and external commercial borrowings are there. So under ODI, you can the investment by Indian company in foreign country is allowed. I mean, overseas direct investment. Indian wants to invest in the foreign country, so up to there is automatically up to 4% of your net worth of an Indian entity. There are some eligible. These are the eligible partners, but individuals shall compile this 2,50,000 limit, and also joint ventures or minorities or wholly owned subsidiaries. You can stake 100%, and reporting the ODI must file within ADs or annual performance report. This called FLA and FLD. Those kind of reports are there. So, if you are foreign asset in a Indian entity, so you need to compile those kind of reports. There are some prohibited sectors, banking sector, real estate sector. Certain conditions are there, and compliances are there. So you can invest up to these limits. You can invest in the foreign also. And external commercial borrowing, loans raised by Indian entities from foreigners in foreign currency or rupees. So you can, if you take the loan, no, you have to pay to the foreigners. If you take the loan in Indian rupees, there is no exchange involved there, so it would be okay. So foreigner has to buy rupees, sell their dollars and give to us. And if you want to, if they give loan in the foreign currency, that would be trade deficit issues, trade deficit in future. So for that, you need to compile more restrictions under RBI, and there are eligible borrowers are there. From this you can borrow, and you need to inform, and minimum maturity, you should inform minimum 5 years or 3 years, whatever it is, based on the conditions. And also end user restrictions are there. You cannot use those for the real estate or capital market or equity market. In the general exceptions are will apply. And also all cost sharing, all these rates, the benchmark rates are there and specified RBI time to time. All these rates will specified, then spread in the over the years. So this year you have 2 million, next year you may have 3 million condition, 3 million restrictions, up to 3 million. This year you can input, you can borrow up to 2 million. This kind of RBI rules uh, was there for commercial borrowing. Because if you borrow foreign currency, you need to compile more conditions and more reporting issues, because ultimately India has to repay foreign currency later. And for a more property, there is a you big and most important concept in the FEMA. What is immovable property under FEMA conditions? And under this, NRI and origin by person who is Indian origin, and companies of foreign nations. So if you are an NRI, non-resident Indian, so you do not have any Indian origin also, so your birth because of the foreign guys. So your forefathers were not related to India. In those cases, there is no Indian origin to you. Say suppose, if it is, if you are in any, you can purchase any commercial property or residential property in India, and there is no limit on the number of properties you can buy. How many you can purchase agriculture land or farmhouse with RBI permission. But if you want to purchase any agriculture land, you need to take the RBI permission, because if land and farmhouses is involved, if any land involvement, there is definitely RBI permission is required. So inherent property for residents, so you can give that property from residents, because your residency, one of your NRI are settled in India, and you can get that property from your residence. So you cannot do purchase of land or point property without RBI without RBI approval. You cannot do this. And also repatriate sale proceedings exceeding original investment freely. Say suppose you invested 100 crores, you invested 100 crores, and you held one property, I mean residential property in India, and you get 150 crores after sale of that property after 5 years. That 150 crores you cannot repatriate to foreign again. So you can earn here, and you spend that balance 50 crores in India only. You cannot uh, it's you cannot get that funds to foreign again, because we need to pay extra to you, right? Say suppose you get 100 crores worth of Indian foreign currency at the time, and while leaving India, you can taking 150 crores worth of Indian currency. So this will be used last to the Indian trade deficit policies or surplus policies. So that will restrict by RBI. So you cannot do this. This is what India last year. And also Indian origin. So in this case, you have same rights of NRI. Additionally, and you can acquire, purchase, gift, or inheritance. You can acquire repatriation sale proceeds up to 1 million. Here only original sale investment. You can up to 1 million per year. You can repatriate your sales to the, again you can transfer your funds to the foreign countries. Again you can repatriate this. And also you cannot do this agriculture land or plantation, same you cannot without RBI permission you cannot plant this kind of uh, activities. Even though if you have a foreign origin, you cannot. And you cannot gift or sale or NRY or without any RBI permission. This is also restricted in this policy. So in for this and this almost are same. Only this repatriation condition is there. And then if you're a foreign entity and the companies can hold property acquired before FEMA, if you legal hold, and before FEMA Act, if the FEMA Act is 1999, if you hold property before FEMA Act, you can hold that. You can acquire for business or branch office with RBI permission. So you can if you hold legally, you can hold that. But inherent from residence or also can hold legally. You can give this company. You can get these property. Say suppose Mukesh Ambani is there, he has one foreign relative, he can inherit the property to the foreign companies, the company who is invested for foreign nations. He can give in India you can get that immovable property, either a residential house or any land, something you can sell that. But with an RBI approval you can open the branch and company business here. But uh, and in that business you can buy a immovable property. You cannot buy immovable property without purpose of non-business transactions. And then you cannot purchase any immovable property in India indirectly or directly. So any foreign company come here and buy any land would be, purchase of any immovable property would be uh, not permissible unless with the RBI permission you can. And you cannot acquire agricultural land in any circumstances. For companies, even though RBI permits, you cannot do. This is prohibited in FEMA Act. And there are some common FEMA violations are there. So if you are non-realized exports within 9 months or 15 months in case of sage, then there is a penalty of 3 times and plus 5,000 per day. And if you delay in ECB reporting, and so there is a 5,000 per day. And there are any lesser, if you exceed the limit more than that, then it is an for 3 times of amount involved. And the prohibited sector 3 times of prohibited involved. And non-repatriation by NBA in array up to 2 lakhs. And Avala transactions, it would be penalty of 3 times plus money laundering act will involve here, so you can penalize. Imprisonment also will come. Then I would be the adjudication proceedings. See, you can read this by your own, because there is a controversy directed. And then step 2, they will give the show cause notice. And then compounding option, if you get the show cause notice, if you accept, you can close here. Else you can do the adjudication. And then the final order, after this adjudication, and first appeal, second appeal will come. And then if you not satisfied here, you can go to the high court. All this is the regular procedure only, but there are some few involvements as are here. So this is the adjudication proceedings. And the key forms for foreign direct investments, there are some these kind of forms are there. And what are the transactions, and you need to file the FLA, FCTRS, FCGPRS 15CA for the regular tax holding certificates. And also for issue of non-resident shares, for transfer between the resident and non-residents. And soft tax forms. All these are the forms involved in the FEMA Act. You can read by your own on this screenshot. You can take the screenshot as well. And these are the quick revision. This is a civil law. The regulator is the RBI. And current accounts are free up to 2,50,000, and more than that you need to take the there are some limitations for each entity, each transaction. For medical 1 lakh, like that. And also capital accounts are restricted, only FEMA transaction allows, few transactions are allowed. And also overall limit is 2,50,000, penalty 3 times, compounding settlement would be good for us. And key wordings we cover this. Thank you guys, thank you for watching till the end. I hope you understand the entire act. But if you feel we are putting the efforts for your growth, please subscribe our channel and keep given comment and like will help to us. Thank you. Thank you. Stay tuned for a more updated videos. Thank you. Thank you very much.